The standard deduction is the most common deduction used on tax returns we prepare these days. An overwhelming majority of people just use the standard deduction. And as we looked at before in some other videos, we talked about how the standard deduction is just a number that is given to us by the IRS based on our filing status, and we get to subtract that from our gross income. Actually, we subtract it from our AGI because the standard deduction is a deduction from AGI. And once we subtract that, then we get our taxable income, and we just keep going on down that tax formula. So let's look at the standard deduction a little more closely here. So a couple of other things to know about the standard deduction is there are a few other rules. Now, these are the 2018 standard deductions. So these numbers have gone up by about $200, and this one's up about $400. So just remember to look in your book or the module under Canvas to get the new amounts. There are some additional amounts you get to add to your standard deduction if you are blind or over 65. And these $2 amounts have also changed by $50. So this is really $16.50 and this is really $13.50 for 2019. So if you're blind and you're single, you get an extra $16.50. So if you're single and blind, you'd get the $12,200 deduction and then another $16.50. If you're married, your additional amount is only $13.50. I don't know why they decided to punish married blind people, but for some reason they don't like them, I guess. And if you're both, you get 2 additional amounts. So if you're both blind and over 65, you get 2 additional amounts. This does not apply to your dependents. So if you have a dependent who's over 65, you don't get any additional amount for that. So let's take a look at this. Abe and Mary are 67 and 62. Mary is legally blind. They don't have any itemized deductions. So how much will their standard deduction be? And we're going to use the 2018 amounts here. So they get $24,000 for married filing jointly. They get $1,300 extra for Abe being over 65. Abe is 67. And then they'll get $1,300 for Mary being blind. Now remember, we get the $1,300 because they're married, so they don't get the higher amount for single people. They get the lower amount for married people because the IRS apparently hates married blind people. So we'll add all this together now, and we'll find out their standard deduction is now $26,600. All that is their standard deduction plus each one of their additional credits. So if Abe was also blind and Mary was over 65, they would get 2 more of these $1,300. So they'd have 4 additional amounts altogether for their standard deduction. There are a couple of instances when you cannot use the standard deduction. Generally, the standard deduction is open to 99.9% of the people, but there are a few situations when you must use the itemized. The first one, and this is the most common one, is married filing separately. If one spouse itemizes, you both have to itemize. And that makes sense if you think about it, because the standard deduction for married filing separately is $12,200. So if one person itemized and had, say, $20,000 of itemized deductions and the other one chose the standard deduction, now they would have like $32,000 of deductions between the 2 of them, and that's not what they're entitled to. They're only entitled to $24,400 as a married filing separate, married filing jointly return would get $24,400. So when you married filing separate, you have that. And so each one are only entitled to $12,200. But if we let one use the standard and one use the itemized, you're going to see where we'll quickly get above that, where if they just had the $20,000 of itemized deductions and had to split it, they would each get $10,000, and that would be less than the standard deduction for the married filing separately. And so that's why if one itemizes, they both have to itemize. And then non-resident aliens and individuals flying short years are just other people who have to itemize, but we very rarely run into that one. We've already briefly talked about the special limit for dependent returns. This is where it gets kind of goofy because they've really made it difficult with the kiddie tax stuff. So again, these are the 2018 numbers, but remember, it's like $1,100 for 2019, and then the standard deduction is $12,200. So for most kids, since they've done away with the the benefits of putting investment type income under the kids' returns now, we don't see that as often anymore. So for most kids, all we're worrying about is their employment income, their earned income from working a part-time job or something. And so that is why their standard deduction is $350 plus their earned income, not to exceed the standard deduction. So let's take an example of this. Bobby's claimed on his parents' tax return, so that means he's a dependent. So we're going to have to apply the dependent limits. He earns $8,650 doing his odd job. What is his standard deduction? Well, we can clearly see using the 2018 numbers, it's his earned income plus $350. So he earned $8,650 plus $350. So his standard deduction is $9,000. So he won't have a tax issue. He'll zero out his taxable income because the standard deduction will fully erase this and he won't owe any taxes. And if Gertrude did any federal income tax withholding on his job, then he'll get a refund.